Hello, I'm Mohammad Ziaul Haq, Senior Accountant with 21 years of experience in accounting and finance. Today, I'm going to walk you through a comprehensive financial analysis of Tesla, one of the world's most interesting companies. This analysis covers Tesla's actual performance from 2015 to 2019 and then projects their financial future through 2029. We will look at three critical areas: the income statement, how much they are making and losing, the balance sheet, how they are financed, and the cash flow, whether they can actually survive and thrive. Let me pull up the analysis. Here's our spreadsheet. As you can see, Tesla company analysis. We have 2015 to 2019 actual data from Tesla's financial statements plus forecasts through 2029. Let's dive in. Let's start with the top line, revenue, which is highlighted in yellow color. Look at this progression. In 2015, 4 billion, 2015, 4 billion, 2016, 7 billion, 2017, 11 billion, 2018, 21 billion, and 2019, 24 billion. This is the total revenue of Tesla. In just 5 years, Tesla grew revenues from 4 billion to nearly 25 billion. That's explosive growth. Now let me show you how I calculated year over year growth. This is year over year growth. It's D7 minus C7 divided by C7. D7 is 2016 total revenue minus 2015 total revenue divided by 2016 total revenue. It comes around 73%. Now, but to understand the full picture, we need to calculate CAGR. CAGR is compound annual growth rate. For this, G7 is 2019 total revenue divided by C7, 2015 total revenue power value 1 divided by 1 by 4 minus 1. It comes around 57%. This means Tesla revenue grew an average of 57% every single year for 5 years. That's exceptional. That's Amazon level growth. To see revenue mix segment, automotive revenues 85%. This is G4 divided by G7. This is G4 divided by G7. 85%. Another one, energy generation and storage, G5 divided by G7. Energy generation and storage divided by total revenues 6%, and service and other G6 divided by G7 is 9%. Okay. Now what's driving this revenue? Percentages are automotive $20 million. Okay. Breakdown by segment. So the percentages are 85% automotive revenues, 6% for energy generation and storage, and for service and other is 9%. As we can see, G4 divided by G7, 20 billion divided by 24 billion. Automotive revenues divided by total revenues is around 85%. Energy generation and storage divided by total revenues, that is G5 divided by G7, 6%. Service and other divided by total revenues, G6 divided by G7, 9%. So Tesla is heavily dependent on selling cars at 85%. That's important, because if the car business falters, the whole company falters. Okay. Now I will show you. Here's the critical finding. Look at Tesla bottom line, net loss. Net loss from 2015 to 2019. In 2015, loss is around $889 million. In 2016, net loss is around $675 million, and 2018 net loss is around $976 million. In 2019, it's around $860 million. 5 years billion in losses. For 5 straight years, this company lost money. But watch what happens in the forecast. I will take you to profit and loss sheet. Here it is. In 2020, forecast profit is net income. You see here net income, it's H14, $1.4 billion US. In 2021, $1.7 billion. In 2022, it's around $2.2 billion. The company flips from losses to billions in profit. That's the inflection point we are looking for. Now let me break down how this happens. First, let's look at gross profit and gross margin. I will take you to input, P&L input. Here you can see G7. Okay, G7 revenue 24 million, 578 million dollar. Now COGS, automatic cost of revenue, 16,398. Okay, then energy generation and storage cost of revenues, services and other cost of revenues. It comes around 2509. Okay, if we calculate, it comes around $4 billion. Now I will show you the gross margin. Gross margin is %, comes around 16.6%. This formula is gross profit divided by revenue into 100. 4069, this is gross profit. Okay, divided by revenue 24,578, total revenue, into 100. It comes around 17%. This is gross margin. So Tesla makes 16.6 approximately cents of gross profit on every dollar of revenue. Okay, next comes EBIT, earnings before interest and taxes. This shows operating profit, EBIT. This is EBIT, earnings before interest and taxes. It's around 69 million dollars. Okay, they are barely breaking even operationally, but look at 2020 forecast. I will switch to profit and loss account. Here, this is our profit and loss account. Here you see net income. This is net income, H14. If you want to see this 2020 forecast, net income as you can see here, see net income values in 2015 negative $889 million, C14, and D14 2016 net income $675 million, losing money, it's negative. In 2017 negative again $1,961 million, losing money. In 2018 F14 again negative balance, 976 million, losing money. In 2019 $862 million, losing money. And 2020 forecast $1.4 billion, it's profitable, approx $1.4 billion. It's H14 here. In 2021 $1.7 billion forecast, 2021 forecast, 2020 forecast $1.4 billion, 2021 forecast $1.7 billion, in 2022 forecast $2.2 billion. That's a $2.3 billion swing from losing $862 million to making $1.4 billion. That's the power of operating leverage. Okay, now I will explain you operating leverage. We will go to sheet OPEX. Let me take you to OPEX sheet. Now this is our OPEX sheet. You see here in KPI section, percentage of OPEX. In 2015 OPEX as a percent of revenue. In 2015 C6 minus 40.5% OPEX as a percent of revenue, 32.4% in 2016, 32.8% in 2017, 2018 20.6, in 2019 16.8. Okay, let me explain operating leverage because this is the secret sauce. Okay, in 2015 40.5% revenues goes to operating expenses. Okay, as I told you before, in 2016 it's around 32.4, 2017 32.8, 2018 20.6, and in 2019 16.8. What this means, in 2015 for every dollar of revenue Tesla spent 40 cents on R&D, selling and administration. By 2019 for every dollar of revenue they only spend 16.8. okay,